Once again, good evening to all of you and Happy New Year to all of you. And many of you are using our one standard deviation weekly reports as per your message. And constantly many of you are following this particular report. So here few things about a trader's behavior into the market is quite unnatural. Here what happens, many of the traders, they never follow any method consistently. They used to follow it for couple of weeks, couple of months. Thereafter they used to hunt for a better method. Why so? Because our expectation from the market is more. We always expect that market should reward us monthly 50%, 30%, 100%, such kind of expectation we have. So when we expect more from the market used to reward us less and we used to get disappointed and we used to hunt for a method which can give us or which can satisfy our greed. So this process continues for a trader month on month basis, year on year basis, and the end result is after a couple of years the trader lacks all confidence in the market and loses a heavy money in the market. The loss is not due to their trading, the loss in trade purely based on their behavior towards the market, purely based on their behavior towards accepting any method which has the capacity to judge the market. And you will be surprised, 90% of the traders in the market never follow any method. They just go by the word of mouth, friend says, TV channel, someone says something, never go about their own logic. But we have many beautiful concepts available in the mathematical domain which can give you a correct estimation of trend. Once your estimation of the trend is correct, your chances of winning the trade also increases. So your first principle for being a successful trader is expect less from the market. Market will reward you more. If your expectation from market is very low, you will be rewarded more. Why so? When you have a lower expectation, you do conservative trading, you hedge your portfolio, you think about your money first. You think about protecting your money. So once such kind of behavior changes towards your trading habit, you start gaining from the market. So when you expect more, you take more risk. Obviously, when you take more risk, you will never hedge, you will never follow any principle to protect your money. So there will be a huge gap exists between a trader and the trader's capital employed in the trade, where trader don't care about his money. So that time the chances of loss increases. So in this constant endeavor from 2005 onwards in smart finance, I'm just advocating one fact: take care of your money first, then the profit. Because once you lose your raw materials employed in the for this business, or once you lose your capital, then there is no method can save you or can give you back that money. So let us start this year with one finest learning, one option strategy learning from the month of January. And in the due course, many other events we are going to conduct. You will know many other subjects also. So here, this is the trend report is being given to you on 30th December. I will give you day by day analysis. What happened on 2nd, what happened on third, what happened on fourth and fifth. So I have taken some reference price, given a calculation. So here you got two facts. Once your price move above 8,212, your trend is up. Once your price move below 8,162, the trend is down. If the uptrend gives, so these are the targets you can get. So I am placing my first target at 0.618 retracement, second, third, fourth and fifth. Same way the downtrend targets. So once you get this thing, I have also explained when you are trading with the future, you should hedge it with an option and trade accordingly. So this is one of the trick is being given here. So if you are buying at here, you must buy a put option and hold the trade, and once it is, use the trailing stop loss and go on trading. Using the same levels, same readings here, how you can form some low risk option strategy. So this is the concept you are going to learn today. So when you are forming the option strategy based on this one standard deviation readings, first you have to closely observe this trend parameter. Whatever the weekly trends you are calculating, either by the use of software or by looking at this report, closely observe this trend parameter. I am not going to tell you anything on delta, gamma, vega, theta and other things. That makes the things more complex, and many traders used to get discouraged to use that. Though many fantastic techniques are there, complex techniques are there, but I am going to tell you in the trader's language, in the trader's point of view, in the very layman's language. When you first you observe the weekly trends, which you generate in the software or which you have seen in the report, and from a simple net credit call spread in case of a downtrend breakout, from a net credit put spread in case of a uptrend breakout. I'll give you an example, day by day example I will give you. So the forming this net credit call spread or put spread is done to get benefit from the time value decay. That is our first thing, because time value is a definite factor which is going to decay over a period of time. So our aim is to get gain from the time value decay, and it is a big money, it is not a very small amount. When you form this net credit call spread or put spread based on this trend breakout, so the objective of this, the net credit call spread benefits in the falling market, net credit put spread benefits you in the rising market. And suppose if you have initiated a net credit call spread and the trend reverses, then you have to close that trade and just reverse your trade also. So why 1SD is important here? Because this credit call spread and put spread anyone can form just by buying a call option and selling a call option, or buying a put option or selling a put option. However, if you look at the trend and form this strategy, then your chances of winning this particular trade used to be maximum. So once you look at the trend and form it, then you gain in maximum times. That is why 1SD is important. So I am going to give you the day by day analysis on this particular strategy. On this particular strategy, day by day analysis as per the trend reference. 2nd January, our first trading day, most of you would have observed market opened at 8215, gone to 8219 just couple of seconds, then it has fallen and you got a sell entry, because within the first 15 minutes of the trade the price didn't sustain. The price didn't sustain, so you have got a sell entry. So here, since you got a sell entry, the strategy For this will be net credits spread need to be formed. So given the sell entry, so I have to form the net credit spread in the call options. So I have chosen the strike 8,200 call option to sell and 8,300 call option to buy. Very simple strategy. So just nearest strike. So I am at 8,187 level. I have started. Currently my downtrend is 8,162 level. So I have come to 8,162-63 level. So for that reason, I have just sold a 8,200 call option and bought 8,300 call option. So that time the prevailing price on 2nd January was 98 and 57. On 3rd January, what happened? The Nifty trend reversed. This 8,002 after hitting 8,151 trend reversed and you have moved in a opposite direction. So when it has given a sell entry, that time I have initiated this net credit strategy. When this trend reversed, means it has gone to 8,212 as per this trend estimation. So the trend changed. So definitely I have to close the trade because this trend is changed. Why I should hold that net credit call spread? So I have closed that trade 8,200 call, which I have sold at 98, bought it back at 150, 8,300 call, which is being bought at 57, sold at 67. So net loss come down to 7 rupees in this strategy. 75 is the lot size, 525 plus brokerage. This is has come. And once we are entering to a uptrend level, I'm just going to choose the net credit spread in the put option, which is going to benefit me from the rising market. So I have chosen same way, 8,200 put I sold 106 and I bought 8,100 put at 68. So this is the trade is being, new trade is being initiated. Old trade is being closed at a loss of 525. On 4th January, it was a consolidation. You can see the price action. It has just 8,200 level. It has settled. And look at the low. So you have not got any chances for in the downtrend direction. And maybe you will be thinking that on the 3rd January, once I enter, then this 8159 has come. If you would have observed the market, this 8159 has come very beginning part of the day. Then after the trend has reversed. So your short trade which you have taken on 2nd January got triggered on 3rd January towards noon time and then after you have closed it. So this price reference point what I have taken, it is on the real time basis I have taken. I have initiated this particular trades. That's why I could able to say that this strategies are being taken. On 5th January, today, in fact Nifty has made 8298 level and closed at 8287 level. So today's close of the Nifty was 8287, very close near to our third target, and it has gone till 8298 level. I am taking the reference from this second target, 8271 level. So at that particular time, what was the performance in this particular strategy? The 8,200 put option which you have sold, but quoting at 78 and this one at 51. So net basis 825 rupees it has been given. And if you take 8,287 level reference, maybe this profit can go to by another 75 per 100 rupees. Based on this, following this report, one standard deviation report from the past 65 weeks, you would have observed In a rarest case, in some 10 to 15% of cases, we used to give a trend breakout used to given and the stop loss triggers and we move in an opposite direction. 10 to 15% cases this kind of thing happens, which has happened in this point of time, 525 rupees. Losses it has come. However, in the most of the cases, if the trend breakout given, then first or second target we used to get. Most of the cases. So if you accept that fact, it is good. But this is a fact, this is a truth. Past 65 weeks data, if you can investigate whatever the reports we have given, in the 10 to 15% cases, means 6 to 7 weeks, you got a trend breakout, didn't achieve any target and the trend reversed. But majority of the cases, more than 85% cases when the trend breakout has given, it has given the first or second target. Backtested data is there. So we always depend on those backfilling data. So it is there in our website. I'll show you at the end of the things. So by this process, this particular trade has given 825 added with another 5200 rupees at the end of the day. I have taken reference at the second target. If I just little change this particular strategy and how the performance changes, just have a look on this. 2nd January you got a sell entry. Instead of selling 8,200 call option of January, I am selling the February and I am buying the 8,300 call option of January. Just here, what I am just going to sell in the January, instead of January, I am selling the February and buying the January. And when that stop loss has triggered in the 3rd January, I have observed that though brokerages and taxes I lost, however, I have a zero loss in the option front. Now, I have reversed the trade and same thing I have repeated here, 8,200 put option February I sold and 8,100 put option January I bought. By this process, just the selling component I am just making it to the next month, buying component I am keeping in the same month, the current month, and the near month I am just taking the selling component. So 4th, that was a consolidation. 5th, if I take the reference of today's last traded price, whatever I have got, 130 and 44, based on that 1050 the profitability is there. So another 10 to 15% of the profit is getting added, and here the loss component also I'm saving a part of the losses. So if you just think in this aspect, when the trend breakout gives, if you initiate this kind of trades, you will find out one small means a great change in the profitability comes here. Now many of you can say that whether this money of 1000 rupees or 1500 rupees worth taking this strategy, definitely yes. To implement this particular strategy, you require some 30 to 35,000 rupees margin. 30 to 35,000 rupees margin is required. And you are not going to hold this strategy forever. It is for weekly perspective and it is highly managed. If you are an office goer, if you do not have particular much time to look into the market, just on the based on the trend breakout, you could able to initiate a trade and you could able to wait for some time. Say Monday I am initiating, by Tuesday, Wednesday or Thursday I am just going to harvest some profit. Provided someone should inform you that this price has come or that price has come. You can set some alert in some software or alert in your broker's terminal. They can send you the SMS or alert so that you will be informed about the happenings in the market. If you follow this particular strategy, you can say that you will get a good gain but this must be followed with a trend parameter. So this is based on the Nifty. We are seeing this 1050 and other things. You will be finding out number of stocks are there whose options are Davis Lab you can take Sun Pharmaceuticals, lot size is more, and you have volatility component is more, and once such kind of stocks gives a breakout, it moves in a very wild manner. So such kind of stocks also you can able to implement these things. And this kind of strategy when you initiate, it is theoretically possible to calculate its profitability. So profitability and the liability you can able to calculate theoretical basis, but you are not going to hold it for a long period of time. You are not going to hold it for 15 days, 20 days. You are just going to hold it. Once the trend breakout has happened, you enter. Once the trend has given a faster second target achievement, you are quitting the trade. So a couple of thousands only you are just gaining from this. So this is the process you have to initiate. But if your brokerages are very high, you are paying for lot 100 rupees, 150 rupees, then this may not be beneficial. But many discount brokerage firms are there which are offering you a great leverage in the brokerage, 9 to 10 rupees per lot. Some are giving 1 or 2 rupees also. Such kind of discount brokerage firms, if you are associated, you will definitely take a great benefit out of that. And second most important fact is, if you have invested in certain stocks, it is idle in the demand. You can create a limit and utilize this strategy. Some amount of money is going to flow to your account. Just you need to look into the trend parameter and take a decision. Imagine you have initiated this particular strategy. I am going to the first part. Many of you will say that, this is you can also use it in the back nifty weekly options. Similar kind of concept you can utilize in the back nifty weekly options, which is definitely going to die down by the weekend. So this can also give you a great benefit. So now look into specific fact. Imagine you have just initiated this strategy. Second, you have sold 8,300 call option, 8,200 call option, bought 8,300 call option. Though it is a rarest of the rare cases, suppose on 3rd January, Nifty open up some 300 point gap up, 300 point up, means it is opening up at 8,500. So in this particular case, your theoretical estimation of profit may be a loss per you. So here 8,300 you have paid 57 rupees premium, which is a pure time value. 8,200 call option you have sold at 98. So till 8298 you are protected. So 2 rupees will be from 8298 to 8,300. So another 2 rupees. So this will be your maximum loss. If there is a huge gap up, which is the rarest of the rare cases, if it is a 400, 500 points gap up happens, this is the maximum loss you can happen. If you have initiated this strategy, there is a gap down, huge gap down happens, then also your profitability will be capped 98 minus 57. So this is your maximum profitability, and that was the maximum liability in theoretical estimation based. Means we are assuming all time value becoming 0 and price moved by a great extent of 3 to 5%. So this time value will become 0 within 1 week. It is a very rarest of rare cases. In case it happens, then also you know your liability and reward much before. Similar kind of things you can just go for the next month. If in this particular case, if you just see 198 minus 57, so this is the maximum reward you can get and maximum liability if I can calculate based on the theoretical estimation. So this is the pure time value you sold it 198. So till 398 you are protected. So 300 you paid some 57 rupees premium here. So you can say, so 398, so 98 I can less it from here. So in case there is a huge gap of happened above 8500, assuming February also lose all its time value and it is converted to, most of the value is converted to intrinsic, then also you will be gaining some 40 rupees here. Max, in this particular case, in case there is a huge gap of, you do not have much to worry, much to lose. In case there is a huge gap down, you have a great money to earn. So 141 rupees of time value you have already taken, so 10,500. In case there is a huge gap up also, you are going to gain something. Out of 3,000, maybe 1,000, 1,500 will come to your pocket. So this particular net credit strategy when you initiate, it gives the profit. But if you do it blindly, it gives losses. When you do it blindly, okay, this is a strategy. Something you sell, something you buy, definitely it will give the profit. It doesn't work in that philosophy. You need to look at the trend very carefully. Once the uptrend is given, breakout, form a strategy in the net credit in the put side. So that uptrend has given, uptrend is going to penetrate one or two levels, so I can get the benefit. When the downtrend breakout is being given, that time form a strategy, net credit strategy in the calls. So the assumption is downtrend is being given, so one or two levels of targets or three levels of targets it can move in the downtrend. So in that case, this credit what I have received, out of that one part of credit I can able to convert it to the profit. And if you have idle stocks in your account, this is the best strategy because it is just sitting in idle, not going to give you any gain. So if it is going to give you some amount of margin, and in that if it is going to reward something, it is the best strategy you can say. So in case I have already explained here, in case there is a huge gap up or gap down, then also you need not have to worry in this. In case of there is a huge gap up or gap down, it is rarest cases. How many days you are getting 300-point gap up in Nifty? Can any solve that problem? Hardly some 3 to 4 trading days in a year used to be a huge gap up or gap down. In such cases, if you can avoid those days also, you can able to have a great thing. And in the Bank Nifty weekly options, if you say some 200 to 250 point, and if you look into this levels of Bank Nifty and initiate, it is a great thing you can get. So it is a 40 lot size. Suppose I am telling 18,281 above the uptrend, and this is 18,079 below the downtrend. Once it is giving you uptrend 18,282, you are going to sell 18,100 put option. Look into this and just do the things, and you can buy some 18,000. So 17,972, 18,100, 18,000 put option. So 100 point gap you can be. Based on the volatility, if there is a 200 point also, you can initiate. So the fact is, if you look into the trend, breakout and decide on those strikes, it will be more appropriate. And it can give you more success in this particular trend. So this concept of option trading, many of you have asked. In our product domain, 3 of our product has the concept of option trading. One is option strategy software, which has the courses also associated with this. All these 3 cases, our courses is same. So the literature what you are getting with this particular product is same here. 9th product also same. 12th product also same. The literature is same book, same DVDs and this. Only the software changes. Here you get an intraday and positional option to intraday and positional. And here you get an option strategy software. Option strategy means any kind of combinations if you form, you can able to projects its liability and profit. So this is option strategy you get here, and here you get one manual addition option strategy software, manual addition, not real time addition, wherein you have to punch the data. So courses is same, only the softwares used to be different based on your objective. So if you are serious enough to learn option strategy, you can opt for any of this product. So this cost some 3,500 and here this cost 8,500 based on the software. So here it costs 10,500. So, and this is since it is a manual addition software, since the last one is this one is a manual addition software, so it is lifetime validity and all real-time softwares 1 year validity. So here many traders say that I have tested many methods. So what I have shown you is the simplest way of implementing. You got a trend breakout, just initiate a net credit strategy. You can initiate it in a more complex way also. So that complex part requires your investigation into the delta, investigation into theta and other things. So that complex way of implementing is also there. So here more simplest way also you can able to implement this. And if anyone has any query related to our products and services, you can visit to our website, get our sales number from here, call to our sales number if you have any product related queries. If you are a user of our software, if you have any issues associated with the software, then you have given a dedicated support number, you call in that or you just post your queries to this email ID. So with this I will be ending today's session. Thank you very much. Thank you for your time.